Hi, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 25th of June. All right, now as we come into the MyFX Trading Hub, now there's been a couple of slight little adjustments here to the analysis. But first of all, just as we come into the, just the start of the Asian session, there's the same core market drivers are in play. US-Iran conflict. Now, Trump has put some extra sanctions on Iran. That's bound to stir them up. China-US trade situation, well, we're expecting the G20 at the end of this week to get those two groups together, and hopefully we get some resolution. And Brexit, well, Boris Johnson still looks like he's in the box seat, and that's been a good thing for sterling, but it's hard to sort of call at this stage. Now, as we come into trading today, there's not a hell of a lot of upcoming events, right? Really, the RBNZ Wednesday is the first, really high extremely impacting event. So you get a bit of time to wait, and that's where these geopolitical events can really dominate. So to me, we're at a bit of a crossroads. We've got normal liquidity in the market, and that's a good thing. The US dollar, now I'm saying it's uncertain, but we are at a crossroads, and this is what I'm talking about. Like the change in the Fed, right? It's changing the Fed's central bank, or sentiment, I should say, is a major thing for all, because it has ramifications for all currency pairs and all economies. Now, the reaction has been a little bit aggressive. On the hourly, it's broken down, and we're banged down through some daily trend lines as well. It's just this last one, the weekly trend line, okay? If that sort of came into play, well, then you would expect a more decisive and maybe a bigger move across the board on these other pairs. And at the moment, until that weekly trend breaks, I think we're going to have a situation where we're getting some of these bit of uncertainty, a bit of sideways activity across the board on the hourly and daily charts. But let me just show you where exactly this US dollar weekly trend line is, because it's quite important, right? The dollar index itself. Now, this is the hourly chart. So as you can see on the hourlies, it's taken a bit of a hammering there from 97 to 70, down to 96. It's not epic, but there is some big things coming up. And if I just change over here to, let me just get off my pen there. Come down into the weekly charts. This is where the action is, right? This is this is the major trends, right? So if you're looking at the overall trends, coming back to second quarter 2011, you're down there around 73. Now up here at the moment, you can see, we've got some levels below, okay, 90, just under 92 and just under 90, or 89 and 3/4. But we have got a weekly trend line support right where the market is at the moment. And to me, this is what I'm saying, it's right at the crossroads. The market doesn't know whether they attack this trend line or not. And what they're probably looking for is something to back it up, right? They're not looking for a short-term move. They're looking for the next medium to long-term move in the dollar. Now, the Fed has erred on the side of caution, said, yeah, they may have to do something. That's got it to where it is now. But are they going to actually do anything? And they need some economic numbers on the back of that. And then at the same time, whilst you've got that going on, you've got the Donald here creating havoc across the board that they can't predict what impact this is going to have on the dollar. Okay, Trump, obviously the sanctions here on Iran. There's also continuing tension with Huawei, the biggest Chinese telecommunication company trying to do things globally, and the US is stopping that as well. And then you got the usual trash talk from various components saying, yeah, dollar slips on US rate cut bets. Yeah, well, you know what? If they were starting to really factor in aggressive rate cuts, it'd be a lot lower than where it is. As I said, we need to get some backup data to really work out what's going on here. So the news, it's geopolitical. And then you come back to look at the major dollar. So you're looking here at, say, 95, 98, sort of almost where it is. Right? This is a big weekly trend line that you need to be aware of, because if this breaks, then it's going to have an impact across the board on all these pairs, right? So to me, we're just waiting to see what happens here. If this one goes, I'll just change that pen so you can see a bit more. If the weekly trend breaks, well, then that should push, it'll definitely push the Aussie and Kiwi daily trends up. They are right at the crossroads as well. So not only is the dollar trend about to, or potentially just holding there, it's also holding the edge over a number of other pairs. Now, the euro is already up on the hourly and daily trends. It's the one pair that's really benefit from the weak dollar. And that's actually going to really upset the ECB because they've already signaled that their economy or the whole Eurozone is under extreme pressure as far as growth and no inflation and all sorts of crap. So they're like, well, if the euro goes up, they're going to be selling less. So it's actually going to impact them more. So I'm thinking if the dollar weekly trend breaks down, you're going to see sterling, Aussie, Kiwi, euro's already gone. These will all go up. And then we'll start to almost potentially change, got a bit of a way to go before we change the long-term trends here in Aussie and Kiwi. But we are flipping, and this is what happens when the Fed changes policy, it flips the trend on a lot of the currency pairs. Now, there's a fair bit of uncertainty. Now, dollar yen is caught up in the safe haven trade. It is, they're not really sure whether to buy or sell it, okay, with the dollar, with Iran, with the US-China situation. I'll tell you one pair that is really honking along and looks super aggressive and makes a hell of a lot of sense is dollar Swiss. Now, Swiss, safe haven trade, buy Swiss, with all this Iran and everything else going on. Plus, you've got the weak dollar. So you've got two scenarios here feeding dollar Swiss. And if you have a look at the charts, the hourly, daily, weekly trend is down. This thing is actually getting hammered. So, maybe a bit too late to get into that trade. But next time, factor this in. It's a bit of a culmination of a few things. Obviously, when people think of safe havens, they're now thinking of yen, Swiss, and say gold. But dollar Swiss, especially with that weak US dollar sentiment, is the pair that is benefiting the most, and that is flying to the downside. So just keep an eye on that. And the Swiss, really opens up the opportunity for Swiss and Swiss crosses for potential opportunities as we come up this week. Now, this is where it gets a little bit weird because then you come back and go, okay, well, where's the direction going to come from for the US dollar? And you look down the calendar here, well, there's not a hell of a lot coming out, okay, with regards to the US dollar. And actually this leaves us with Trump, okay, as the driver. So he does backflips every other day. So it's very hard to work out what the dollar's going to do. So to me, just keep an eye on the weekly trend for the US dollar. That to me is the signal where we could start to see, especially the Aussie and Kiwi. Now, these markets are short for good reason. Fundamentally, the economies are struggling, as is Euro. And I mean, the Bank of England have erred on the side of caution, not as probably aggressive as the ECB, the RBA or RBNZ, but these pairs will flip and the markets are short, okay? The big fund managers are still short, Aussie and Kiwi. If these things go up more, we may see a massive short squeeze to the top side. I don't think that the moves will be that consistent because you know what? You've got the fundamentals all going down and then you've got the currencies going up. Yep, these things can shoot up, but what it means is the move up is probably short-lived because at the end of the day, the fundamentals win. Right, that's the whole picture. Now, where they would continue to go up and the fundamentals will not change is if, once again, we get some really weak US numbers or the Fed come out and say, you know what, yeah, we said last week these things were going down and they come out and be more aggressive, well, then you'll see these currencies fly to the top side. It won't make a lot of sense because fundamentally they're going down, but they will all turn up. All right, and that's where we are. Now, if I just give you a quick look at the major currency pairs, what I'm talking about with regards Aussie and Kiwi, you can see here, these are actually sort of daily resistance levels. Okay, so you can see just a little bit higher on the Aussie, a little bit higher on the Kiwi. You're going to get a move to the top side. But at the moment, we're going to wait for the RBNZ tomorrow to really see if the Kiwi goes. If it moves before then, I think we're going to see just a spike higher and back into the range, a bit of a false break trade because there's no clear momentum at this point unless we see something weird out of Trump over the Asian session. Now, dollar yen just grinding sideways. To me, it's a bit of a lottery at this point. We do have some, get a bit of an Ichiban set up here on the top side, which to me looks good. You don't overthink it. Think, well, you know what? If this thing breaks for whatever reason to the top side, you're going to have all traders trading there. So to me, there's a potential chance, even though we are going to start running into some more resistance levels on the top side here in dollar yen. They're lining up. Now, Euro just cruising to the top side. I mean, it's got another 100 or so points before we hit resistance. So Euro could very easily just keep slowly climbing against the fundamentals. There was a bit of talk yesterday I saw in the media after I posted this yesterday about sterling and, the bit of a resistance level up here around 127.50. Well, it tried to jam through there You can see how the probably traders at the banks are trying to clear the risk above that level. Probably got a little bit of it done. Hasn't really gone anywhere. It's pretty confusing. You got Brexit, you got Trump, you got all this other stuff going on, and then you got the Bank of England sort of erring on the side of caution. It's like pretty hard to work out what the hell's going on in sterling, I can tell you. Dollar CAD, we had that big move down on the inflation numbers last week. Then the retail sales figures came out weak. We're now trading sideways, and oil looks like it's stabilized. So at the moment, to me, dollar CAD is going down, but short term, it is just grinding a bit sideways now. So just factor that in. When you do your analysis, you should be really having a look across the board, across your weekly, daily, and hourly trends. It's very rare to get the weekly trend a major focus. To me, it is with the US dollar index, and that this is the trigger for the rest of all these other pairs. So just keep an eye on that as you go through the next couple of days. We're very thin on the ground. Now, we got the RBNZ Wednesday, and then after that, you're really looking for to Friday for the Eurozone CPI and the Canadian GDP. So pretty loose markets. And so what that means is the direction could come from anywhere. You're looking at your trend lines more in particular, especially when you've got also the Trump doing his best to upset global markets or take away, deflect domestic issues on himself by picking fights with everyone else. It's pretty tricky, right? So to me, dollar Swiss, the clearest pair at the moment. Look for the Swiss crosses as potential opportunities. You'll probably find most of them have already left the house, but there may be some entries coming up. All right, guys, that's it from me. Pretty thorough coverage there. So just, take your time as you get through the markets today. All right, guys, have a good one. Cheerio.